Host Nick Toka. On today's show, U.S. Treasury Secretary Scott Bessent hails Bitcoin a store of value. Yeah, baby. No country wins a global trade war. Bitcoin to surge as a result, says Analyst. Also, Bitcoin price forecast. Bitcoin eyes 100,000 rebound as $47 billion in whale inflows demands offset trade war sell-off. The biddy is the place to be, folks. We're going to go through some market watch and Bitcoin technical analysis, all this and so much more on today's show. Welcome, folks, to Crypto News Global. I'm your host, Nick Toka, and we're seeing the biddy go pretty much sideways, down about 1%, considering the traditional financial markets are down 5 and 6%. We're holding steady. Yesterday, when everything else was down, the biddy was up, and the whole market was up, in fact. So it's sustaining, whereas the traditional market is tanking. So that tells me that not only is Bitcoin the place to be right now, but it also tells me that the traditional financial markets have these high multipliers that are just not worth it. Warren Buffett got out of the stock market and went to cash about 2 months ago. Clearly, he knew something was up. And at this point, I don't recommend selling. I mean, if you want to have a long time frame here, you don't just want to sell and lose money. I would actually recommend buying the dip, and if the prices go down more, then buy the dip again and just keep buying the dip, and that way you'll be averaging down slowly. Same way you would do for the crypto market, you want to do with the traditional financial markets, flipping all your stocks because, oh my God, things went down. That's when you're losing money. When you are buying the dip, you know, this is part of basic economics, guys. You want to buy the dip. Why? Because it's on sale, folks. Everybody else is running the other way. That's when you swoop in and buy things on sale. So keep that in mind. Let's get right into Bitcoin technical analysis. We've got the biddy down 1%, 83,171 right now. Ethereum down 1.5%, 1796. Solana down 3.5%, 119 bucks. Cardano down 2%, 65 cents. XRP down 0.5%, $2.13. Doge down 2.5%, 16, just under 17 cents. Checking out the crypto bubbles, if we go into our daily look, we do see that most things are down, but mildly down. About 1, 2, 3, 4%. There's a couple outliers, and of course there's a couple going the opposite way. Pi, it's been down for weeks after making a big surge when it first came out, but suddenly today it's up 11%. Go figure. OKB also up 5.5%, but everything else down again. Not a huge dump. About 1 to 5%. Zooming out to the weekly, we have about a 80-20 mix in the red. We've got Walrus up 32%, EOS up 37%, Hex up 11%, Atom up 13%, but pretty much everything else down substantially. If you look at the weekly view, anywhere down up till even, what am I seeing here, 25%. Zooming out to the monthly view, we've got, again, about 90% in the red for the month. Currently, the crypto market cap, we've got Bitcoin sitting at $1.6864 trillion. Ethereum, $216 billion. XRP, $123 billion. Solana 61 billion, Doge 25 billion, Cardano 22 billion, Tron 22 billion. The total market cap as it stands right now is $2.62 trillion, with Bitcoin holding 62.8% of that, Ethereum 8.25%, XRP 4.75%. Crypto Fear and Greed Index is currently sitting at a 30 in fear. Yesterday was a 28, and last week was a 26, also in fear. There's approximately 1,103 days left until the next Bitcoin halving in 2028, with 158,880 blocks left to mine until that time. Top assets by market cap globally, we've got gold as usual way up top at $20.5 trillion, Apple 2.8 trillion, Microsoft 2.6 trillion, Nvidia 2.3, Amazon 1.8 trillion, Google 1.78 trillion, Saudi Aramco 1.696 trillion, silver 1.662, the Biddy in the number 9 position 1.646 trillion, just barely under silver, and Facebook wrapping up the top 10 at 1.3 trillion. You can currently get 1,205 satoshis for one fiat US dollar. And when going into the US national debt, we'll see that the national debt up again, currently at 36,687 billion and change, which equals to 107,267 per U.S. citizen, or 323,048 per U.S. taxpayer. When looking at the Doge clock, it's the only thing that's climbing here, folks. They have saved, this would be the Department of Government Efficiency, they have saved U.S. citizens $284 billion, which equals to $2,527 per taxpayer. That's up $22 from yesterday per taxpayer. So when everybody else is pulling money out of your pocket, Doge is giving you money back, and people are complaining about it. It's just interesting. Don't listen to the legacy media, folks. They're full of shit. That's all I can say, because the numbers don't lie. We're shown right there that Doge is actually saving people money. You know, people are complaining, oh, people lost their jobs. And, well, were they doing their job properly? If in the private sector you weren't doing a good job, what would happen to you, right? In the government, they're used to having these lifelong positions where they're, no matter what they do, work from home or never work at all. There they are still with their jobs. So this is kind of the situation we're at. They're cleaning up the fluff and they're giving it back to the taxpayer, which is really what they should be doing in every country as far as I'm concerned. Now, the Biddy is beginning to be a hot commodity. We have the U.S. Treasury Secretary Scott Bessent. He's hailing Bitcoin as a store of value. In a stunning development, the U.S. Treasury Secretary Scott Bessent hailed Bitcoin as an emerging store of value, comparing Bitcoin with gold. Bessent highlighted the latter's resilience to the broader financial market debacle. Notably, the U.S. Treasury Secretary's statement comes in a response to Bitcoin's recent decoupling from the traditional markets. Let's discuss how Bessent evaluated the cryptocurrency's rebound. Scott Bessent compares Bitcoin to gold, calls it a store of value. In an interview with podcaster Tucker Carlson, a U.S. Treasury Secretary Scott Bessent has shared his view on the recent rebound of Bitcoin. As Bitcoin remains stable around the 83,000 level, despite the stock market's largest collapse since 2020, Bessent hails it as an emerging store of value. In addition, the Treasury Secretary presented an analogy between Bitcoin and gold, emphasizing the asset's potential. He stated, Bitcoin is becoming a store of value. Gold's has historically been a store of value, a lot of different stores of value over time. Stock market fall, Bitcoin remains strong. Scott Bessent optimistic comments on Bitcoin comes in a response to its recent stability despite the broader negative trend. Following Donald Trump's tariff announcement, the stock market around the world fell sharply, bucking the trend. BTC remains stable around a significant point of 83,000. Recently, Matrixport, a financial service platform, spotted a strong correlation between Bitcoin and the stock market. Though Bitcoin remained resilient to the precious equity market crash, Matrixport predicted that the cryptocurrency would follow stock market trends following tariff announcement. In the latest analysis, Matrixport identified a different sentiment, with the BTC poised for a significant upsurge, defying the correlation. Tariffs may lead to long-term negotiation, says Scott Bessent. In response to the market volatility after Trump tariff announcement, Scott Bessent opined that this could lead to a stronger negotiation process. While this prolonged period could include multiple discussions between nations, it could result in the market volatility, economic uncertainty, and potentially even inflation. In such a scenario, investors could look for an alternative asset like Bitcoin as a hedge. Commenting on this potential market shift, David Hernandez, crypto investment specialist at 21 Shares, stated, "As risk assets continue to sell off, investors may increasingly rotate into traditional hedges like bonds and gold, or into Bitcoin, which has shown notable resilience relative to the equities in recent days. Gold, a traditional safe haven asset, is up around 15% so far this year as traders and central banks buy into the hedge against economic and geopolitical uncertainties. Bitcoin's price action this week has been a true sentiment to its investment case as an emerging store of value and potential for uncorrelated returns." Yeah, so even the big boys, U.S. Treasury Secretary is basically saying, put your money in the biddy because the stock market's shit and she's going to keep crashing. So interesting to have someone with that title come out and recommend Bitcoin. I think it's great because no country wins a global tariff trade war, and Bitcoin is going to surge as a result, says another analyst. Inflation, geopolitical tensions, high debt, and macroeconomic turmoil will eventually break the backbone of the current financial order. U.S. President Donald Trump's trade policies will create worldwide macroeconomic turmoil and short financial crisis that will ultimately lead to greater adoption of Bitcoin as a store of value asset, according to Bitwise analyst Jeff Park. Economic instability from the trade war will cause governments to adopt inflationary fiscal and monetary policies, which will further debase currencies and lead to a worldwide flight to safety in alternative stores of value like Bitcoin, Park argued. This increased demand for Bitcoin will drive prices much higher in the long term, the analyst continued. In a post on X on February 2nd, Park predicted the immediate impact of a trade war. The tariff costs, most likely through higher inflation, will be shared by both the U.S. and trading partners, but the relative impact will be much heavier on foreigners. These countries will then have to find a way to fend off their weak growth issues. Despite the increased demand for Bitcoin as a store of value against rapidly depreciating fiat currencies driving Bitcoin prices higher in the long term, global financial markets would feel the short-term pain and wealth destruction of the trade war, according to Park. Global markets are feeling the short-term shock. Tariffs are stagflationary for the world as a whole, economist and hedge fund manager Ray Dalio wrote at an X post on April 2nd. Tariffs tend to be more deflationary for the levied goods producers and more inflationary for importing country, Dalio added. He concluded that the level of debt and trade imbalances will ultimately lead to a global financial shift that changes the established monetary order. If these trade tariffs do lead to a massive trade war, it's going to be very ugly for the whole world, Coin Bureau founder and market analyst Nick Puckgren told Cointelegraph in an interview. The analyst said the U.S. economy has a 40% chance of a recession in 2025 amid fears of a lengthy trade war and the macroeconomic uncertainty brought by protectionist trade policies. Yeah, so again, another good thing for the biddy. You know, people are starting to get scared of the stock market, and they're taking their money out. They're putting it into bonds. They are putting it into the biddy, and they're putting it into gold, more safe havens. So I think that's why we're seeing Bitcoin prices and gold, of course, pump as of when these tariffs were put in place. And I've already stated that I feel like these tariffs are very much a negotiating tactic, and it's working. According to Trump, every single country is calling him saying, hey, let's make a deal. Hey, let's make a deal. I mean, Israel came out and said, we're now announcing 0 tariffs on the United States, right? Then you have some dummies like the Canadian doofus, pseudo self-elected current interim Prime Minister Carney, who is, we're fighting back with our own tariffs. Like, what an idiot. Anyway, the smart people will use this as an opportunity. The smart leaders will use it as an opportunity to negotiate better deals with Trump and better deals with the tariffs. So reducing tariffs for both their country and the states. This is the best case scenario, and I feel like once this does happen, once the word gets out, and somebody smart is going to come out and do this. It might be this Netanyahu guy who's already done it, and I suspect Trump is just in a waiting pattern to see who the idiots of the world are and who the smart prime ministers, presidents are of the world. And I suspect in a couple of weeks he's going to come out and say, well, thank you, Israel. This was a great offer, and yes, you're going to give us 0 tariffs. Well, we're going to give you 0 tariffs as well. And then once the word gets out, then everybody's going to start, throwing 0 tariff numbers around. And yes, we're dropping all our tariffs and this kind of crap. But as of now, I think it's a wait and see and feel who the idiots of the world are, and who can be worked with and who they don't want to work with. For example, if Canada wants to be idiots, then Trump's going to treat them like idiots. If Israel want to be helpful and non-protectionist and open their borders for trade, then likely the states will also open their borders for trade with very little tariffs. It just makes sense, folks. This is exactly where it's going to be heading. I feel like more of a negotiation than anything. I mean, who's the best negotiator in the country? Maybe the history. I mean, he's got a book, Trump, from 20 years ago called The Art of the Deal. I think I might have it as one of the books of the week in my comments, guys. So what do you think he's trying to do, right? I'm tired of being fucked over by all these countries. Well, let's teach him a lesson. I know how to negotiate better than you. And he sees that these guys are nothing but career politicians that don't know how to negotiate anything and just basically pay out because there's no repercussions. They just take money from the taxpayer, increase taxes, and pay out whatever it is. Higher wages? Okay, sure, we'll pay the government more money. I've seen government wages go up as much as 20 some odd % in a year, and then there's the common worker who's working damn hard, much harder than any politician, and they're getting 1% in 5 years. So think about it. They're doing good things over the states, no matter what CNN is telling you guys. I've recommended before and recommend again. Ben Shapiro, the Daily Wire. He's a very good. I'm pretty sure he's a lawyer by trade, but he started this show, a huge company, $300 million company. He started from the ground up, leaving his private sector job and creating his own little company. And he's nonpartisan, unbiased, tells it how it is. I've heard him say bad things about Trump. I've heard him say great things about Trump. He's kind of even keel, and he won't bullshit you. That's a good place to look. If you think that CNN is telling you the truth, it is not. None of those legacy media are telling you the truth. they're all being paid by the same people. They're all being fed also the same news by the same news feed. I've worked in media and I've had to deal with the news feeds, and there's only one news feed, folks. They're all getting their news from one source. So when you think they're all different, no, they're all getting it. Here's the news. They don't just make up the news. Of course, they're going to make up their little local stories, robbery or good news stories you might hear, family stories or pet stories or things like that. But the headline national news is coming from the same news wire for every single broadcasting legacy media company. It all comes in through this little box. I had to manage it, so I know. And they are all getting their news. Whatever Reuters wants to feed them, this is what they're getting. So, maybe I should look into who owns Reuters, but I'm sure it's some, someone who's not going to tell us the full facts. So think about that when you're watching CNN. Watch it with a grain of salt, and then watch the alternatives and see what the differences are. And pretty close and pretty fast, you'll kind of get disgusted on the type of things that CNN's feeding everybody. So I'd recommend that. Ben Shapiro, awesome source. Definitely give it a listen. It's free. Now we've got a nice Bitcoin price forecast. Bitcoin eyes 100,000, a rebound as $47 billion in whale demand offsets trade war sell-off. So while everybody's dumping their traditional financial stocks, whales are putting their money into Bitcoin, $47 billion worth. Bitcoin price steadies above 80,000 as whale demand surges over 47 billion, defying U.S.-China trade war and market volatility and equity sell-offs. Bitcoin price consolidates firmly above 82,000 on Saturday, April 5th, as investors rotate capital into crypto amid escalating U.S.-China trade tensions. Why is Bitcoin price rising amid the U.S.-China trade war? Bitcoin price has held firmly above the 80,000 mark despite the U.S. tariffs sparking intense market turbulence across the global financial markets over the past week. Bitcoin's resilience price action has caught investors' attention and could potentially trigger a major rally in the past week. This sharp contrast between plunging equities and stable crypto valuations points to a broader shift in investor sentiment. As capital flees traditional markets, Bitcoin is emerging as a strategic hedge. Three factors are driving this trend. Bitcoin's neutrality in sovereign conflict. Bitcoin operates independently of any single government, making it less vulnerable to geopolitical tensions and tariff policies. As trade frictions escalate and global blocs prepare countermeasures, Bitcoin's decentralized feature appeals to investors seeking safety flight to safety plays. Number two, insulation from inflation and U.S. corporate earnings risk. Unlike equity holdings, Bitcoin doesn't rely on earnings, production pipelines, or executive strategy. Investors are increasingly turning to Bitcoin for its multinational companies face revenue pressure from disrupted global trade routes. More so, a Bitcoin has a fixed supply, making it resistant to inflation risks that could arise from the looming supply chain crisis. Number three, safe haven demand amid geopolitical uncertainty. With NATO and EU countries escalating involvement in the Russia-Ukraine conflict and fears mounting that U.S. trade measures could trigger cascading retaliations worldwide, risk appetite is shrinking in equities and government bonds. Should Washington fail to de-escalate trade tensions diplomatically, another leg down in equity markets is likely, particularly U.S. tech stock sector with revenue streams exposed to global shocks. In contrast, Bitcoin is positioned to absorb displaced capital, benefiting global accessibility and permissionless features. Bitcoin whale transactions rise 120% in a week. Huge. Bitcoin price decouples from the broader market sell-off, large investors and corporate firms took notice. Confirming this narrative, on-chain data trends show that while global markets tanked, whale activity on the Bitcoin network has been on the rise. Into the blocks, large transaction volume charts monitor the total value of transactions that exceed $100,000 in value at any given day. This provides clear insight into the activity of corporate entities and deep-pocketed whale investors around certain market events. So we've got in blue in this chart here the whales definitely buying more of the biddy. So the 7-day high, 24-hour high. So the blue is what we're looking at here, and we see that whales have definitely increased their buying, certainly since the trade tariffs have come into play by quite a bit, it seems. As seen in the chart above, all Bitcoin whale transactions that exceed 100,000 on March 23rd summed up to a total of 26 billion. While investors exited U.S. stocks and other adjacent commodity markets, Bitcoin whale transactions has increased to 47 billion at a close of April 4th, according to the latest data. Whale transactions increasing while Bitcoin price holds steady signals that the whale investors have been acquiring large amounts of Bitcoin, nullifying the bearish pressure from the retail weak hands selling under the trade war panic. Bitcoin price forecast, bull eyes, 85,000 rebound as whale demand offsets trade war volatility. Bitcoin price forecast remains cautiously bullish as macroeconomic instability begins to catalyze institutional rotation in the digital assets. Despite Friday's close at 83,000, a 1% daily loss, Bitcoin continues to trade above the critical 83,000 support, resisting broader financial market turmoil driven by trade tensions between the U.S. and China. From a technical standpoint, the price action has formed a minor bullish reversal following a 2-day rebound, highlighted by the recent 3.5% upswing across April 4th and April 5th. This recovery aligns with whale activity surging to 47 billion, reinforcing the idea that larger entities are absorbing retail panic. The super trend moving averages, particularly the 5 and 8-day simple moving averages, are beginning to converge just beneath the current price level, suggesting imminent resistance at 84,500 with interim support holding at 83,000. Volume trends remain neutral, but the most notable divergence is seen in the bull-bear power BBP, which still prints a negative reading of 1,253. This suggests weak short-term momentum, but does not negate the bullish setup entirely. If BTC closes above 84,500 with sustained whale support, the door opens to retest 86,000. A failure here, however, risks a decline toward 82K. So the whales are putting their money in, money where their mouth is, and running away from the traditional stock market. We had pretty much 3 stories today that all talk about the same thing, including Scott Bessent, the federal treasury chair, basically saying, the biddy's where to be right now. I guess some would argue that gold is also a good place to be right now, but considering the slow movement in gold and the extreme volatility in Bitcoin, there's a lot more room for Bitcoin. And I would even go as far as to say that the top 3, Bitcoin, Solana, XRP, have a huge way to run up. Bitcoin, of course, with its limited supply, is going to be your most steady spot to put your money. But the other 2 are also realistic. I try and invest in all 3 equally because they just the other two just have so much more room to run up. You know, imagine the Solana price goes up to a couple $1,000, for example, or imagine the XRP price goes up to $20. I mean, these are things that I look at in terms of long term. I don't look at the day-to-day crap, guys, and you shouldn't look at the day-to-day, you know, ups and downs. The market's up one day, it's down the next day, up the next one day, next day, next day, next day. But when you really look at the overall picture, and that is the long term, which is what the savvy investors do. I've said it before. I'm going to bring up the chart here with from TradingView, and I'm going to look at the long-term Bitcoin price. And as we see here, has the Bitcoin price gone down or has the Bitcoin price gone up? Right? When you look over the long term, the price is always going to go up. So if you look at it like, oh man, I have to sell because Bitcoin's down, one Bitcoin today is worth one Bitcoin tomorrow, and it was worth one Bitcoin a week ago. And it's the same thing with the stock market. One share in Apple is still worth a share in Apple. If you own, 10 shares of Apple, then you still own 10 shares of Apple, right? That doesn't change. The value of it changes. Now, in terms of looking long term, as I would recommend, as the savvy investors do, Warren Buffett, who we see is, smart. Like, if you want to follow somebody, this guy was out of the market a month ago saying, I'm going to cash, I don't trust anything. When they asked him about, I've said this before in the program, when they asked him about his trading strategy, and, they asked, well, how long should you hold a stock, right? And he basically said, well, the standard investor is, a day trader. They're, buying and selling in hours or days. The savvy investor holds stocks for, 2 to 3 years. And my time frame, Buffett's time frame, he said, is forever, right? So this goes back to the long-term approach. If you look at the long history, the price is always going to go up. So don't freak out when prices are down. Look at it like prices are on sale, right? If there was a sale on something you wanted at the store at Best Buy, you'd go get it on sale. So why is it so different when something's on sale in the stock market? Look at it that way. Don't look at it like, oh my God, the prices are down. Look at it like, oh my goodness, this is great. I can get stuff on sale now. Remember, folks, take advantage because money is abundant and money is everywhere. There is over $900 trillion in assets globally. Time is what's scarce, so spend your time wisely. Spend less money than what you earn additionally, because this will always keep you in the green. If you start making more money, start saving more money. Don't start spending more money, and start saving and investing when you're young. Ideally, when you're in your late teens or early 20s, start investing, and hopefully you can retire when you're 40 and 45 and still in your prime. If you have a great idea, I say this every day, start today. Even if you're not ready, start today, and things will slowly come together for you. Here at Crypto News Global, you're not only watching or listening to Crypto News Global, folks, you are the basis for my show, and I enjoy finding the latest news globally, so you don't have to. I'm hopefully on a trend to have over 500 subscribers by the end of this year, and it would be fantastic if you could hit that subscribe button and join me on this trend. If you found the stream enjoyable, please share, like, comment, and subscribe, and we will see you on the next stream. Folks, thanks so much for joining.